Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Other major news story just crossing the tape and breaking this morning. Donald Trump, the first former U.S. president convicted of a felony, was sentenced by a New York judge Friday to no jail or probation for his hush money case. Joining us right now is June Grasso, Bloomberg's legal analyst here. June, no surprises here for you?
No, really no surprises at all. I thought it would take much longer if Trump decided to speak. So he did give a little rambling speech, echoing things that he said over and over again, how this is a witch hunt, how it's not fair, even talking, though, about the election. He got a few things in there. So, I mean, this is what the judge had said he was going to do. He was going to sentence him to an unconditional release. There was not going to be any kind of prison time, no penalties, no fines, nothing. It's just the stigma of now being a convicted felon and in 10 days being the first president to be sworn in as the president of the United States as a convicted felon. I think that's what he's been trying to avoid all along.
Well, June, it does say that Trump plans to appeal the verdict and seek to overturn his conviction through the appeals process. What would that look like? What is the likelihood of that outcome?
Well, so Trump has appealed just about every legal decision that has been handed down against him. So this is no surprise. He's already started to appeal some of the motions and some of the things the judge did. So what happens is once the sentence is handed down, they have about 30 days to say whether or not they're going to appeal. And then they do their arguments in an appellate brief to the appellate division in this case. And then he'll probably appeal whatever they say if it's not good for him to the highest court in New York, which is the New York Court of Appeals, and most likely to the Supreme Court, because he's going to be arguing about these presidential immunity decisions and whether they affected. In other words, what happened here is he said after that presidential immunity decision came out, he said that Judge Merchan shouldn't have allowed in some of the testimony, for example, for Hope Hicks, which had taken place in the White House because that was done in the course of his presidential duties. Judge Merchan disagreed with that and also said that there was overwhelming evidence, so that wasn't even needed for the jury. So that's going to be definitely one of his points of appeal.
What else is out there for the president? Like most people, I can't keep track, and I think it feels like most of them are either resolved or dismissed or...
Well, when he takes office, nothing is going to happen to him at all for 4 years because they won't go after. There's no prosecution of sitting presidents. The Georgia case is still sort of hanging around in appellate courts. The prosecutor there was thrown out because of a relationship with another prosecutor on the case. So that's left that very tenuous. Okay. That case is still there. But, I mean, really, he'll just have appeals of this, and the classified document case goes forward without him.
Something else in front of the Supreme Court, the TikTok case for... Hundreds of millions of people out there, I think, care about this. How do you expect this to play out?
You know, this is hard, and I'm about to try to listen to the oral arguments, so we'll try to see how the justices feel. It's very hard because in this case, the United States is claiming that this is a matter of national security. And with matters of national security, the justices usually leave it up to the executive branch. I mean, the executive branch has a lot of authority, and there's deference to the executive branch. But at the same time, you know, the First Amendment experts I've spoken to talk about this as a First Amendment violation, the violation of the First Amendment rights of the millions and millions of people who are on TikTok and who don't have any other way to express themselves exactly the way they do on TikTok. So we'll see what happens. One thing is for sure, it's going to be a very fast decision because they're going to come down with it before the ban goes into effect.
I know President-elect Donald Trump has also spoken out about his view on this whole idea of the TikTok ban. How much of a sway does it even seem that he would be able to make toward this decision?
Well, he has been... His views, as on many things, have been varying on TikTok. He was against it, then for it, against it. Now he is apparently for it. He submitted a brief to the Supreme Court as the upcoming president, the president-elect, saying that the court should delay the law going into effect so that he could come in and solve the problem. And it talked about him being a master deal maker and how he's the only one who can come in and solve this whole problem. I mean, how much weight that carries, we'll have to see.
All right, June, thank you so much. We appreciate it. June Grasso, legal analyst for Bloomberg, giving us the latest on the sentencing handing down from the New York court here on President-elect Trump, as well as the oral arguments being heard right now in the U.S. Supreme Court regarding TikTok and the ownership there. So we'll keep in touch with June.
You're listening to the Bloomberg Intelligence Podcast. Catch the program live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is Norah Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. When we get to the economic data points we saw today, particularly the jobs numbers, we can do that with Jeffrey Cleveland, chief economist for Payden Rygel. Jeffrey, thank you so much for joining us. Jeffrey, I know you're based in Los Angeles. Terrible situation out there. I wonder if we could just get a couple minutes from you. You're right on the ground there in Los Angeles. What's the experience like?
Well, condolences to all the families who've lost property and loved ones. And, big shout out to all the first responders. I think it's just amazing working through the night here to try and keep things in check. I mean, this is an ongoing situation. We're still in the midst of it. Fortunately, in my personal situation, we've been very fortunate. And it's great to see the community in Los Angeles, a lot of neighbors coming together and helping each other. So I think that's been, one positive aspect of this whole affair.
All right, Jeffrey, our thoughts and prayers are obviously with our good friends out there in Los Angeles, so you guys stay safe. Jeffrey, we had a really, really strong non-farm payrolls number here today. What were your takeaways?
I think it's marvelous. All things considered, I'm usually very upbeat. It's kind of hard to be upbeat, here in LA on a day like this, but, the jobs data is excellent. I guess a few myths that have been debunked. One was that, Paul, high rates were going to derail the economy. It just really hasn't happened. Average payroll growth in 2024, I guess when all things are said and done, looks like it'll be around 186,000 monthly average pace, which is a little bit slower than 2023, but excellent job growth. It's keeping that unemployment rate just above 4% for the last 7 months, really, which is really remarkable, the stability we're seeing there. So I think this is a great jobs report, all things considered. If inflation continues to moderate, this is really the soft landing that we had been hoping for, and definitely the Fed has been hoping for. And so it's all around great news, actually, on all fronts for me.
So, Jeffrey, this was obviously good news, and when we think about the strength of the U.S. economy, but of course there are some speculations about how this could affect the Fed's rate cut trajectory. Of course, you mentioned that there is still scope for rate cuts in 2025, but when? What's the timeline for that, in your view?
I think the most important message for investors is that the Fed is not trying to slow the economy or soften the labor market. I think they're very content with where things are. As far as the labor market being a threat to the inflation outlook, I think those risks have diminished. So average hourly earnings back below 4%. So we're not in that situation where we were 2 years ago, where people were worried about a wage price sort of spiral. So I don't think the Fed needs to try to slow the labor market. They would like to stick the landing. They would like to get a soft landing. But I think they can be patient from here. I think for us that means waiting to see if inflation continues to moderate. We got a very favorable core PCE reading for November, just before the end of the year. So if we get more readings like that to start 2025, I think that could be very good news. So I think they can wait, be patient, no urgency to cut rates, but we do think they will cut rates over the course of the year. Right now, we're still penciled in at one cut per quarter, so about 100 basis points. But that's really driven by inflation getting back to 2% at some point.
Yeah, and it looks like, I'm just looking at the University of Michigan data, and they have obviously some one-year inflation outlook, 5 to 10-year inflation outlooks. Both of those ticked up to about 3.3%, much higher, well, I guess noticeably higher than where they were last month and higher than maybe the consensus forecast here. What do you think that data reflects?
I think that reflects sentiment, Paul. Every client that I talk to, colleagues and friends and family members, they're definitely worried that inflation will pick back up. whether that's something they're seeing in their day-to-day, or it's just the fear of maybe some economic policy shifts that are going to be enacted here that will push inflation back up. That's definitely palpable fear that you hear expressed. So maybe that's showing up in sentiment indicators. Looking at the actual data though for core PCE, we're pretty optimistic, Paul. We had that 0.1% month-to-month reading for November, and when we run the numbers, it's possible core PCE gets to 2% year on year by sometime in the third quarter of this year of 2025, which will be fantastic news for everyone, for consumers especially. So I think that's maybe sentiment driving things more than actual inflation data that we're seeing.
Jeffrey, quickly, what was the driving force behind the pickup in the December payrolls numbers?
Well, I mean, I think, across the board, the surprise here is probably the government payrolls being in there, leisure and hospitality. I think overall, just everyone's expecting that the higher interest rates were going to lead to a cool down, a bit more notable slowdown. And we really haven't seen that. The 3-month moving average was 170K. So even if you exclude the December reading, you still see pretty solid 3-month average. So just a lot more resilience overall in the pace of payrolls the last few months than many people had expected.
All right, Jeffrey, thank you so much. We appreciate it. Jeffrey Cleveland, Chief Economist, Payden Rygel. He is based in Los Angeles, so we wish him and all our good friends in Los Angeles Godspeed here as they deal with these fires here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The economic data point of the day, of course, was the labor data payroll number coming out, change in non-farm payroll, came out at 256,000, and the consensus was 165,000. So a big beat in terms of the labor market. We're seeing movement in the financial markets as a result of that. Let's break that number down a little bit. We can do that with Kate Duchene, CEO of RGP. Kate, thanks so much for joining us here. Again, a big big beat on that headline print. What did you take away?
Well, I think that tells us that the labor market continues to be very strong. I think that's a good indication, although it will put a pause probably on interest rate cuts. But it does tell us that the market is stronger than we've all believed.
How are you thinking about it in the mix of the outlook for how the Fed could be viewing rate cuts in 2025?
Well, I think it probably portends a pause in January, and we'll see where we go. What we need to see is more movement in the labor market, not just new jobs, but movement. That really tells us that projects are starting to happen. So many companies are facing technological change and disruption. And we need to see more transactional work come back into the marketplace, and that then will signal that really post-election the economic market is improving.
Kate, how about on the wage front here? We had average hourly earnings on a year-over-year basis came in at positive 3.9%, just a smidge below the 4% consensus. What's the wage market look like?
Well, I think it's been strong, but I'd say cooling slightly. This is an interesting time of year because the quits rate is down, but that's to be expected given that so many companies are year-end and they are paying bonuses in the first quarter of the new calendar year. So people tend to stay put a little bit to get their bonuses and then start moving around. We are cautiously optimistic that we're going to start seeing more talent movement. It's been pretty stagnant the last 12 months as people have gotten more conservative in their thinking, both clients spending money and talent moving. But we're cautiously optimistic that that's opening up in the new calendar year post-election when economic activity may pick up with deregulation, tax cuts, et cetera.
What were the main drivers behind this big blowout report? We saw a big beat this morning. What was driving that?
Yeah, mostly it was in retail, hospitality, healthcare, and government. So, you have to look at where the activity is strongest, and it's not absolutely across the board. I think manufacturing was down, as a matter of fact. So, when you look at a report like this, you got to dig into the detail to say how does it impact particular segments of business.
We had news this week that's really important to global Wall Street. JP Morgan announced they want everybody back in the office 5 days a week, and that follows on some other big tech companies like Amazon making similar announcements. Are we going to see some change here? It kind of felt like the status quo was a hybrid thing, but it still seems like some big companies want to get their people back full time.
Right. So we work with some of the best brands in the world. We work with 88% of the Fortune 500. So we have a good pulse of what's happening in the workplace. And I would say absolutely the dominant trend is still a hybrid environment. So many highly skilled employees say they will not go back full time. So I think that while certain companies are laying down these mandates, very hard to enforce and very hard to keep high potentials who don't want to work that way anymore. So clearly what we see across the board in our client base is a hybrid approach. 2 to 3 days a week in the office for collaboration, learning together, and some flexibility, which is what high-performing talent wants.
All right. Kate, thank you so much. We appreciate that. Kate Duchene, CEO of RGP. I don't know. I kind of feel like we're seeing a little bit of a move in that pendulum back to more in office versus less in office. I don't know. But I mean, Kate, again, she talks to all these Fortune 500 companies. I think a lot of people are going to still push back on that. We'll have to see how that plays out.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, Norah, Mulinda, in for Alex Steele here today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Of course, the big news story of the week have been the terrible fires in Los Angeles, and we've been trying to get some different angles on that all week. Will Wade joins us, energy and climate reporter for Bloomberg News. Will, thanks so much. I appreciate getting some time here. We want to talk to you about the Constellation deal as well in the energy space. But first, anything to add on these L.A. fires?
I mean, the fires are just tragic. They're huge. We see that CAL FIRE's just ranked the Palisades fire as the third most damaging in state history. The Eaton one is right behind it as the fourth. Of course, the worst was the 2018 Camp Fire that destroyed the entire city of Palisades. But these things are still burning. And, there's still 150,000 people that are under evacuation order, including some of my family.
Talk to us about that. Do you have some of your family in that part of the world?
Sure. My aunt lives in North Pasadena. She was evacuated on Tuesday. She's doing fine. She's rattled, but I've been tracking the progress of the fire. It's kind of getting closer to her house. I really hope it does fine. It's actually a really nice house. They use it on the Apple TV show Shrinking.
Oh, is that right?
Yeah, it's a really nice place. And then, I heard from my mom yesterday. She said, "Hey, remember that restaurant I took you to brunch last summer when you were visiting? Yeah, it burned down. That was up on North Lake Street." So it feels very personal to me.
Yep. More and more stories coming out.
Yeah, I mean, when you think about a lot of these stories, some people didn't even have the opportunity to go back to their homes to grab items, especially as the evacuations have been in place. Have your family members spoken at all to that experience, or what have you been hearing on the ground?
I know that my mom was telling me that my aunt left in such a hurry. She left some, important medication behind, and so they were able to go back and get that. A neighbor was able to get in, but it's unclear when they're going to be able to go back. They're not very contained right now. The Palisades fire is still only 8% contained, and the Eaton one, that's the one in Pasadena, is only 3% contained. Those are not big numbers.
Yep, absolutely. All right, well, hopefully some good news coming out of that part of the world soon. Let's talk about, in your world of reporting there, Constellation Energy surged after it agreed to acquire closely held Calpine Corp for $16.4 billion to create the largest fleet of U.S. power stations. Talk to us about this deal. What's going on here?
So Constellation already is notable. They have the biggest fleet of nuclear power plants, and they're shares have gone up like more than 100% in the past year, because like the last year, all we've seen in electricity is more and more demand for electricity from data centers and artificial intelligence and electric vehicles and people shifting their homes to electric heating and gas heating. And basically anyone who's got electricity to sell is in a really strong position. So Constellation went out and bought Calpine, which is the biggest gas provider. They've got the biggest fleet of gas power plants. And so now they're going to have together the biggest power plant fleet in the entire United States. It's going to be enormous. And it comes at a time when power demand is just going up in ways that we haven't seen in decades. And the utilities weren't really ready for this. That we didn't see the AI boom coming a year ago. And so now, if you have a power plant, you're in a great place, and it takes years to build new ones.
Is this transaction setting the tone for M&A activity in the energy space more broadly? What's the outlook for the return of more deals in 2025?
We could see more. I'm hearing a lot of people talking about interest in energy transactions, and it used to be one of the sleepiest corners of the M&A space. People thought, power plants were just like super boring assets. They just make power and sell power, and utilities had like these reliable dividends that your grandmothers always loved. But the share prices for so many of these companies have just surged in the past year. So, it's given them money to go shopping.
Well, let's step back in your space, just the greater energy space here. Where does nuclear fit in here? We've had some entrepreneurs come in here and say, hey, we've got some new technology, tiny little nuclear plant. I'll put it next to a big, data center, and it's a good way. It's a good option. Talk to us about that type of stuff.
Okay, so on paper, that sounds like the perfect combination. These small modular reactors can go next to the data centers. The reactors run around the clock. The data centers run around the clock. It makes a lot of sense. The thing to keep in mind is the time frame, because we're not going to see any of these new reactors for years. Okay. Maybe a couple by the end of the decade, most likely a 2030s thing. But these are just very, very slow-moving projects. And the data center companies, they want as much power as they can get, like yesterday. They need it now.
Yep. All right. So maybe
we're going to see a lot of gas.
Yes. Yeah, I think you're right. And I think we've got some of that in this country. Will Wade, thanks so much for joining us. Will Wade, energy and climate reporter for Bloomberg News, joining us via Zoom. And we appreciate sharing some of his family experiences that some of his family members are having out there in Los Angeles, as those folks continue to deal with a very, very difficult situation. We heard from Rob Carolan, Bloomberg meteorologist, earlier in the hour. A couple of days here of some reduced winds, maybe throughout the weekend, and that's would be a big help. But then, unfortunately, the forecast calls for those winds to pick up next week. So maybe the firefighters can get a better handle on some of these fires over the next several days.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.